First-time homebuyers in 2025, things are changing daily, my friends. If you know a first-time homebuyer or you are one, you're going to want to tune in with our good friend and mortgage broker, Mr. Dion Beg, so he can tell you exactly what you need to know for 2025. Here we are, my friends, back with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
I'm great, Gary. How's things?
Things are excellent. We are, this is June 11th already. We are halfway through the year of 2025, my friend.
It's true. In fact, we were just looking at our quarterly numbers, and we surprised ourselves in that we actually well beyond where we thought we'd be at this time of year. I know that right now the headlines are that the transaction volume across all of Canada is quite a bit down. But I guess we're fortunate that we have a whole pool of past clients who need assistance with refinances and things, as well as their children and family members who are purchasing. So, yeah, it's a time to take stock, approaching the end of Q2.
Yeah, that's it. Q2 is coming to an end. It's interesting because I just Googled, real estate news and that sort of thing this morning. And there's, depending on what you're looking for, you can find it. If you want the negative real estate news, you can find it. If you want some positive news, you can find it, my friends. So that's what these calls are all about, filtering through some of that. I was reading an article that I think was put out by Global, and they're talking about the real estate market is seeing signs of improvement. And then you get into it, and it was like, well, there's a little pocket north of Toronto. There's one in the Fraser Valley in BC, but the Vancouver market, the Toronto markets, they're still slow. Okay.
And one of the headlines I read this past week or so was a Vancouver developer dropped the prices on his entire condominium building. Did you see that one?
I haven't, but that doesn't surprise me. Yeah, okay.
25%. Basically, overnight, he said, I'm dropping prices by 25%. In order to move his product. So that's how desperate some of these developers are right now in Vancouver.
Wow. I hope some of those previous or current purchasers are getting some of that 25% to show up in their purchase and sale agreement. Anyways, my friends, we often do this maybe once or twice a year is kind of do a check-in with our first-time home buyers, because what we talked about sometimes even last week, but what we talked about, for instance, last year with first-time home buyers, albeit is usually the same sort of information, but the details are always and ever changing, especially when it comes to buying your first time, your first home. So we thought we'd spend a little bit of time on buying your first home in 2025 and what that looks like. And of course, Dion works with a lot of first-time home buyers, as many of his clients are having children and they're of that age and buying properties. So if you're a parent of one, tune in as well, because this is important stuff. Dion, we're not going to go dive deep today. We're going to do a longer form video and more of a webinar style on that, so we can send it to our clients that way and our listeners. But first time home buyers, I'm just going to tee it up like that. What do they need to know? And then we'll start diving deeper on some of those items.
Look, every week I'll get a call from somebody who says, Dion, I was referred to you by my brother, my friend, whomever. I'm a first time buyer. I'm admittedly green. I don't exactly know what I'm doing or what questions I should be asking. And, basically our job is to help guide them. And sometimes, most of the time they have some questions, they have some idea. But our job is to provide them with clear structure so that they leave that conversation knowing, okay, I need to do these things in order to get pre-approved, right? So off the top, I call this the mortgage triangle. Whenever you go for a mortgage, the banks look for three main criteria. They are your income, your credit, and your down payment, okay? So just understand that when you're qualifying for a mortgage, be it with me or your bank or anybody else, those are the big three questions that you need to be prepared to discuss on a call. And so, you know what? Let's start with down payment, if that's good with you, Gary. Yeah?
Let's do it.
Back when I bought my first home in Canada, I think the purchase price was close enough to $300,000. 5% down was $15,000. And that was a number that was pretty easily saved if, diligently saved over maybe 1 or 2 years for most people. right? In today's world, that same house, unfortunately, or for some, unfortunately for me, the property prices are now, say, closer to $1 million. And so for the purpose of today's conversation, just to keep the math simple, we'll call it $1 million. I know there's many properties out there that are much lower than this number, so you can take the numbers I'm giving you and just chop them in half, okay, for the most part. So down payment on $1 million, traditionally, and up until last year, you actually needed 20% down. Okay, so you would have needed 200 grand down to buy a $1 million property last year. But rules changed, which now allow us to purchase that property with minimum down payment. Now, this is where confusion starts to kick in, Gary, because everybody who's a first-time buyer has heard about 5% down. And so what they think is, if I'm buying a $1 million property, I can buy with $50,000, and that is all that I need, okay? That's somewhat correct, but it's not actually correct. And this is why. The rule is that when we look at the purchase price, the minimum down payment needed will be 5% of the first $500,000. So on your first $500,000, you're required to put down just $25,000, okay? Now, anything above that $500,000 number requires 10% down, okay? So what that means is that top 500K would require not 25 grand down, but $50,000 down, in addition to the 25 grand in the first half of the purchase price here. So in this case, we need $75,000 down payment. Is that clear? Yeah.
Yeah.
And so again, just to clear the confusion, if you're buying for a 600 grand, it's 25 grand plus that 100 grand on top requires 10 grand more. So that's 35 grand down. So just know that 5% by itself is not going to cut it, especially if you're buying over 500K. Now, the challenge is, geez, that's still a large down payment, especially for first-time home buyers, right? And the question is, where in the world am I going to get access to this money? Right. So the thing is that, yes, it does take a lot longer to save if all you're doing is saving. The vehicles in which people choose to save, and again, I'll list them off here and we'll dive deeper later. But the FHSA, First Home Savings Account, is by far the best vehicle, followed closely by RRSP under the Home Buyers Plan and the TFSA. A lot of our clients are drawing funds from those accounts, which they've been chipping money into over the last couple of years. Still, there's often a shortfall, okay? So let's say, this young couple has done their absolute best to get together 50 grand, but they need a little bit more help. And now more and more than ever, Gary, we're seeing the assistance of parents in gifting funds to their children for that down payment in order to get to at least that minimum down payment, in this case, $75,000. So just know that if down payment is your challenge, sometimes you'll have a conversation with a client and explain to them how maybe they've got some money sitting in a regular savings account and it's better dropped into an FHSA or to their RSPs, and we'll explain the tax benefits and all of that at that time. And sometimes it's also helping younger people construct a conversation that they need to have with their parents about the fact that, hey, we're really close to the down payment that we need, but we need an extra 25 grand, and here's why. And oftentimes I'm involved in those conversations on a Zoom call or a phone call. We'll have mom and dad and their child, and I need to sort of explain to the whole family group, hey, mom and dad, the house you bought for 300 grand that's now worth 2 million, you won the lottery, and you need to give a little bit of your lottery winnings to your child so he can at least, get his first foot on the property ladder. So those are the conversations that we have in order to, get people ready for the down payment component. They're the big ones that come off the top.
Yeah, and there's lots to unpack there, and I don't want to go too deep on today's call, but if you're that parent or you're the child of that parent, I think the biggest thing from my perspective, Dion, is having that conversation and sometimes reminding those owners, in a sense, listen, you bought your home or you got into the market 40, maybe even 50 years ago, and you may have sold 3 or 4 homes over that time, and things have changed drastically. And of course, on the drastic side, it's the financial piece of it. And more or less, the process is still somewhat the same. And I even know, in talking with my own parents and in-laws and everything else, they remember their purchase being $80,000 or $100,000, and they relate back to that. And we often tell people, Dion, they are our loved ones, and we love them to death. But that's their experience. And their experience from a financial perspective, when you're buying a home for $150,000 or even $300,000, is not today's experience buying, in the GTA or Vancouver or anywhere else at $800,000, $1 million or more. It's just a different reality, and having that enlightening conversation sometimes.
And in line with what you're saying, the phrase I hear from many parents is, it was hard for us as well, but we managed to make it work. So my children, I understand things are hard today, but they were hard for us as well. So, my kids should be able to make it work all by themselves.
Sure.
But once we explain, the multiple of income required today versus, 10, 20, 30 years ago, the monthly income as a proportion to monthly, payments, those types of things, that's when, the light bulb goes on for some families, where they go, oh, okay, yeah, I do now understand that, I need to help my kid now. Because they need to get their foot on the property ladder.
Yeah, and the other thing that you mentioned, I just want to circle back to ever so briefly, albeit Dion and I are not tax advisors in any shape or form. However, that the TFSA and that first time home buyers, oh my gosh, the name escapes me now.
FHSA, yeah. First time savers account.
Thank you. They are excellent vehicles for investing into, because, as basically the name suggests, it's tax-free. And if you just have a high interest savings account, you want to move those funds into either one of those vehicles, because anything going forward, in a sense, would be tax-free, and you can use that for your down payment. And that is the best vehicle to get into, especially if you might be watching this, and I hope you are. If you are extremely young, in your early 20s, start putting $100 or $200 a month into that, and you'd be surprised, in 5 to 10 years from now, if you keep that cadence up, you'd be surprised of what that generates. Even if buying a home is not on your horizon right now, or you've got that child, talk to them and educate them about what that could look like. That was one of the... Yeah, very good. Okay. Qualifying for a mortgage. Talk to us a little bit about what that looks like, and we'll kind of wrap up with that, because there's so many different mortgage terminologies out there, and I don't understand everything from what's a term or the length of the mortgage and all that kind of stuff.
Okay, so just back to the qualifying question, guys. So we've jumped deep into down payment today. The other 2 factors, which I'll just scrape the surface of today: income and credit. Okay, income. Rule of thumb, generally speaking, in today's market at least, you can usually borrow about 5 times your income, okay? Back when interest rates were much higher, in the 6% range, and now they're in the 4% range. Back when they were in the 6% range, we were down to around 4 times income, okay? But in today's world, we can borrow approximately 5 times income. So if you make $100,000 a year, we're looking at a $500K loan amount, approximately $200K, you're at that $1 million number, okay? Now, the thing that pulls that down, is other debt, and that's where we jump over to the credit question. The one we always talk about, Gary, is the good old car loan or car lease. And if you have, let's just say you've got $500 worth of other payments, be it a student loan, a personal line of credit card, every $500 that you use to service that debt is $500 that we cannot use to service a debt on a mortgage, okay? And again, basic math here with mortgages is that $500 car payment drops your borrowing power by about $100,000, okay? So, earlier when I said, if you made $200,000 a year, you qualify for a $1 million loan. Well, if you've got a car payment of $500, now we're down to $900K. Okay. So again, we'll dive deeper into some of these in a future podcast.
There's so many moving parts to obviously not only qualifying for a mortgage, but getting a mortgage. Kind of wrap us up with this, Dion, is, if someone comes and has that discovery call with you, what are some of the leading questions perhaps they should be asking you?
Well, the ones that I want to ask them actually are, before I ask them any of those other things, it's always like, what is a manageable monthly payment for you? Okay. Because once I get an idea of what that is, then we can go into, what is possible on the qualifying side. But we want our clients to get very clear on what they're committing to for the next 5 years. For every month, this payment's coming your way. And we want to make sure that if we're going to put you into this debt, that it is a debt that you will be able to sustainably manage, and that we're not taking all your cash. We talked about down payment earlier. We never want a client to close on a deal and have no money in the bank. We want to make sure that we're putting you into a deal where, yes, you've got some cash reserves behind you, so that, if hiccups happen in your life over the next 5 years, you can manage the payments. So they're the big ones. And oftentimes, it might surprise you when I ask a client that question, like, oh, I'm not really sure. I'm not really sure what should be manageable, right? And I would say to any first-time home buyer, before looking at houses, look at your budget. And when I say your budget, like, what is that monthly payment you can manage? And then everything else should be built around that payment that is manageable for you. Yeah,
well said. And Dion, we've talked in the last few videos about when a mortgage renews and talking to you kind of, if not 2 months, not 2 weeks, but maybe 6 months or even a year out, because we want to set those people up for success. This is similar. If you're a first-time home buyer and you're thinking to yourself, I still need 1 more year to save up, reach out to Dion, because perhaps maybe you don't, or Dion gives you a couple of different ideas or suggestions to accelerate that down payment, your savings, or gives you a clearer picture of what that path to ownership looks like. Dion, how do people get a hold of you if they want to do that?
Yeah, kangamortgage.ca or Instagram at Dion Beg.
There you have it, my friends. Of course, that's Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.